So, welcome back. So today we are going to shift our topics to talk about the labor markets for physicians. Well, there are several concepts has been discussed in the PowerPoints, so hopefully you have went through them. Today I'm going to only talk about how people actually generally decide on their career path by using the very simple economic concepts of discount factors to take a look at how people decide on what kind of career path they would like to take on in order to maximize their lifespan income. So I have a table here. So this basically illustrates three different career paths that the individual can later take on in the life. However, we are going to divide the salaries of these professions into four different periods. So periods T0, so it's an initial period, maybe describing the periods right after they graduate from the bachelor degree. And then period 1s, maybe after a few years later, they start building up these repetitions in the professions. And period 2, when they're getting more and more experience, becoming a senior positions. And period 3, when they finally max out the incomes from that professions. Take a look of three of them separately. Number one is the physicians. So in the beginning stage of this career path, obviously we have studied in the chapter, physician usually has to earn a bachelor degree before they can enter to the medical school. Well, once they enter to this medical school, of course they don't immediately earn income. They have to keep on paying all these tuitions and books, study materials, all these things that they have to invest financially. So the initial incomes for physicians, it's negative because they have to still pay the money comparing to other professions. Well, in the next periods, well, the physician starts to earn some level of income. Well, because we have learned from the chapter, the physicians will not immediately be able to practice in the markets because they have to go through those residencies program. So they will earn a lot less compared to other professions at the beginning stage because they have to still doing all these internship jobs and residencies program. But once they finish or complete the trainings, they can finally practice in the market and they can start earning a much higher level of salary compared to other professions. And then later, they can earn the maximum. As an accountant, well, the initial pay is relatively low. However, it's pretty stable because as an accountant, well, all you need is to get your bachelor degree and then you can start working in the accounting firms while you are maybe getting the certificates for your CPA. So you can, in general, expect a very, very steady rate of salary over the path of the lifetime. So it might be low at the beginning, but then it grows as more and more experience and more qualifications you get for the industry. And the last job here is being an artist. So obviously there are a lot of successful cases out there when a very young singer, they become very famous at the beginning stage of the career path. They earn the maximum income because of the repetitions, because of their appearance, because of the talents, or maybe because of basically just the shots to the market. Well, there are huge amounts of income goes into the pockets at the beginning stage of the career path. However, once they get into the next stage, well, they finally run out of ideas, they finally having this aging problem, their appearance not as sharp as before, well, the income will go down dramatically. So the sharp decrease in income in the later stage of life, obviously it's being illustrated here. So this income path basically describes, well, what each proficients can earn in different periods. However, is that all? Do we only compare the numbers here and then say, well, you know what, I think accounting makes most sense for me, or maybe physicians make most sense for me to earn maximum income, or maybe artists is the career path I prefer? Well, it really depends on the discount factors in our decisions of making the different level of incomes in our lifespans. So let's give an example here. Let's suppose my discount factors, which is delta here. Well, delta is a Greek letter, so it's a very special sign here. Let's say delta represents the discount factors, and the number that is illustrating the delta is 0.9. So what does it mean? To intuitively understand what a discount factor is, you have to think about, well, what is worth now comparing to what's worth later in the future, the next period. So in general, the intuitions explains the discount factor actually illustrates the money value in the next period. In this case, 0.9 only worth about 90% as much as I value the same amount of money in this period. So give you a very simple example. That means for the $100 I have now, the next period, I only value it as $90 in this case. It's only 90% left of what I think it's worth. Well, there are several things that actually explain. First of all, well, the future income, it's not something that you can spend now. So obviously, when you're getting the same amount of money in the future, you might probably only buy less of the stuff in the future. So somehow this discount factor works in a way to explain how we think about the future income comparing to what we can earn right now immediately. So I have this exercise for you. Once we figure out the, or given the fact that the discount factor is 0.9, I would like you guys to figure out, well, what is the discount rates that we have discussed in the chapter? So this R here is the discount rate, or something, sometimes we actually refer this to a market interest rate. So the equations for the discount factor delta is equal to 1 over 1 plus R. Now it's time for you to use your basic algebra skill to figure out what's the values for R is in these equations. So I would strongly suggest you to pause this video and try to work on these equations here and solve for R yourself. So, are you ready to solve for R? So let's suppose I have 0.9 equals to 1 over 1 plus R. So I'm going to use some very basic algebra skill here. So I'm going to shift this bottom part to the left-hand side. So I have 1 plus R multiplied by 0.9 is equal to 1. 0.9 you multiply by 1 plus 0.9 you multiply by R is equal to 1. And then you subtract 0.9 here, and you subtract 0.9 here. You get 0.9, R equals to 0.1. So R is equal to 0.1 divided by 0.9, which is approximately 11.11%. Hopefully you're getting the right answer. So again, what does this 11.11% mean? So this 11.11% basically represents a market interest rate. So that means in order for me to get the same values of money in the future, well, I will have to have this $100 I have on hand right now to earn an interest of 11.11% in the next period in order to have the same value that I actually value the money I have now on hand. So that means, well, in order for me to value the same money or the amount of money that has the same values as what I have right now, let's say $100, I will have to receive $100 times 11.11% gain of interest payments in order to value the money the same way as of today. So this is a very important factor here because, well, this actually explains to us, well, how much we actually discounts the money from today and also to the future. So next exercise, we are going to discover how we are going to decide on which career path to follow based on this information here. So we're going to discover this question here now. So which career should I pick in order to maximize my lifetime income? So in this case, we don't simply just compare the income, the total income received by each professions at different periods because it will be misleading because what we actually prefer to earn in the future will be discounted by the discount factor. So we have to actually use something that we call the net present value. So in order to calculate the net present value, the book actually gives you these equations, which is the sum of delta to the t power times your income at time period t. So this notation here might be confusing for someone out there. If you have not taken a advanced algebra or maybe a calculus, you might not be too familiar with the summation sign here. Well, this summation sign basically only means that we are trying to sum of the numbers together in order to get the total of it. So what kind of number we are looking at? So in this equation, we would like to actually use the delta, the discount factor, goes to the t power. So we will have different time periods. So period 0, period 1, period 2, period 3, times the incomes, the level of income, which is the amounts of dollar earned in that specific period. So let me just do one example for you guys so that you can have a better idea. But in order to calculate the net present value for physicians, in this case, I'm going to get some information from here, which is the discount factor. So first, I will have 0.9 delta to the t power in time period 0. And multiply by the income at time 0. Well, that is only the values of income in the first time period. Now I'm going to add the next period income. Again, the next period income is going to be discounted by 0.9. So I have again 0.9 to the first power, because it's in period 1 now, times the income in the first period, which is 2. And then the next period income will be 0.9 to the second power, period 2, times the income in the second period, $10. And finally, of course, the last period is 0.9 to the third power times 15. So you can see what we're trying to do here, we are trying to calculate the present values for the first period income, the present values for the second period income, the present value of the first periods, second periods, and then the third period income. And we're trying to add them all up. So in this case, we have the total income or the total net present values for physicians equals to 14.84. So I would suggest you to actually make use of this opportunity to calculate the net present values for accountants and also artists to see which job actually bring a higher level of income to your lifespan. So try to take a few minutes and run these numbers. So I'm going to give you all the numbers now, assuming you have already done it on your own. So the net present values for accountants is equal to 12.31, and the net present values as an artist will equals to about 14, let's say 12.44. So this net present value, again, describes to us the values of the total lifespan income for each profession. So in this case, obviously, given this number, I believe most people with a discount factor of 0.9 will choose to become a physician. But you might have already recognized something might actually play a very important role in our decisions to decide on the career path we want to take on. Well, because the discount factor is not the same for everyone. It could be for me that have a 0.9 of discount factors so that I will pick the physicians to be my future career. However, you might actually want to play around with the number and try to figure out, well, how much will you discount for your future income, and take a look at how you will actually change the number in the equations in order to have a different results. Well, last thing I would like to talk about before I end this video today is, in this case, I will prefer to pick physicians to be my career path instead of being accountants. So in the book, we actually talk about the internal rates of returns, which is the special interest rate that yields same level of income for two professions. So in this case, I actually picked physicians to be my career in the future. So that means I will actually have a higher returns, well, from my point of view, right, because of my discount factor. I will have a higher return from this job compared to as an accountant. So it must also be true that I will have an internal rate of returns to become a physician that is higher than the interest rates that I have calculated in the previous sections. So remember, we calculate the interest rates, the market interest rate, which is the discount rate from my discount factors equations. So that R must be true that it's lower than the internal rate of returns to become a physician. And that's the only reason to explain why I would choose physicians to be my future career. So there is a very interesting readings from the books that I would strongly suggest students to read from the book, because not only they talk about how people decided on what jobs to take in the future and why physicians becomes a very high returns rates of the professions in the field, but also there are other factors that actually causing problems in the healthcare markets. Well, definitely do extensive readings on the shortage of the physicians market, and also what causes the premium wage that we pay for these physicians in the labor market. And don't forget about the discrimination part too. So I will see you next time.